What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did have a relatively volatile day in the stock market, but we still don't see any material selling. We still have plenty of earnings to go through, so there's still plenty of opportunity for surprises and volatility. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we saw SPY relatively flat, only going up 0.09%. And we did see SPY struggling around that resistance level right around 457. Now intraday we were above that level, trading above 458, but we did close below 457 and we did close near the low of the day of the candle. Now this doesn't sound that significant, but this is the first time we've closed near the low of the day ever since we had that pullback in the very early stages of October. So yes, that is a little bit of a trend shift because we were seeing very bullish candlesticks and we were actually closing near the high of the day. And now we're seeing a little bit of a shift in that trend. Now that's completely normal and to be expected after such a monster bull rally to see a little bit of cooling down near critical resistance. So watch that level at 457 and we're very close to the price target at 460, which we're very likely going to see a lot of sellers at that level. Now keep in mind the highest probability chance I gave last night was a pullback from 457 back to about the gap close at 450 or the gap close right around 447 to support area of 448. So I still do think that's the highest probability chance, but obviously you still need to watch the price action. If we start breaking right through 457, there's still the chance we go straight to 460 before we see that pullback. Obviously don't rule out the possibility that we just go straight for a blow off top and we blast right through 460 and continue to run. That's not likely going to happen, but it's obviously still a possibility. So just follow the price action. Right now we still have plenty of gaps to the downside, but I continue to tell you I don't expect all of these to fill until a stock market correction. The gap down here at 442 and definitely the gap at 436 are not likely going to get filled until we get a full-blown correction, which might not come for a month or two, so don't watch those gaps down there too closely. We have very strong support around 444, and in the event we blast through all these support levels, then you can start looking for the gaps below. So we'll still have strong support right around 450's gap close and the gap close right around 447. So that's the highest probability chance that we're going to find support at that level and then bounce and make another brand new all-time high. Now there is another possibility that we bull flag above the previous all-time high and then attempt to break out and get to that new all-time high at 460. So watch all of these possibilities, and that's why I always tell you to watch the price action, because if you watch the price action at these critical levels, you're going to know the best trade to make at the time. We can sit here and speculate about all the possible scenarios, but nothing beats watching the price action at these levels and then following whatever the price action is telling you to do. On the NASDAQ 100 triple Qs, we also attempted to break out of the previous all-time high, but we did get a hard rejection at that level. So we did see a rejection at that resistance level right around 382.7. Now we didn't close necessarily at the low of the day, but we definitely closed near the low of the day as opposed to the high of the day, and we did hold up above that support level at 378. Remember, there's still plenty of big tech earnings this week, so anything is possible. And if we get really good earnings with really good guidance, we should easily blast through the previous all-time high and get to the new all-time high at 388. So watch that price action, because if we're bouncing off 378 and we make another crack at breaking out, we could see the triple Qs running straight to 388 before we get a pullback. So watch that downside support at 378 and the strong support level at 373. And below 373, we do have strong support at our 50 EMA, which is right around 369. I don't think we'll go to the 50 EMA unless we see a decisive break below 373. So I do think 373 is your most critical support level to pay attention to. There is a gap down here at 360, but don't even look at that gap unless we break down below 370, because it's very unlikely that gap's going to get filled until we go through a full-blown correction. On the Dow Jones, we were flat on the day, but at one point we were trading at 359, so we're very close to that new all-time high price target at 360. Downside support levels will be 356.5, 355, and then the strong support level at 351, and the gap close is right around 349, but I don't expect to see that gap getting filled at this time. So by far the strongest support level is going to be right around 355, so watch that area closely. As you can tell on the Dow Jones, we're very close to having the full bull trend once that 20 simple moving average crosses back above that 50 EMA, so we're very close to having the full bull trend in the Dow Jones. In the Russell 2000, we did see a significant pullback today, going down 0.75% and breaking back down below 229. So we didn't get that second day in a row closing above 229, but that doesn't mean we're not still breaking out. Remember, the breakout level was down here right around 225, and we've been spending plenty of time above that level, and the Russell 2000 does have the full bull trend. The 50 EMA is now getting above that gap, so it's less likely we're going to fill that gap down there right around 222.7. So right now, the strongest support levels you need to pay attention to are 226.5 and the breakout level right around 225. If the Russell 2000 holds above 225, it's very likely going to attempt to break out once more, and that's when we could see that brand new all-time high. So watch those strong support levels, and the breakout level will be a close back above 229 because that'll be our second day in a row closing above that level. And then the breakout resistance trend line will be above 232. Above that resistance will be 234 and the new all-time high price target at 238. On the Arkk ETF, we were down 0.5% today, and at one point Arkk was trading above 124, but we gave back all those gains and closed below resistance at 123. So Arkk is still looking bullish because we're still above the 50 EMA. So as long as Arkk is above 117, it is still developing a lot of bullish momentum. To the downside, look for support at 120 and the 50 EMA at 117, and below 117, we're very likely going to close that gap right around 113.6. So on a close below 117, look for strong support right around 113. Otherwise, we're going to see Arkk rolling back over and coming all the way back down to about 109 or 106. To the upside, watch for resistance at 123, 126, and 128. On the VIX, we were up 4.72% today, and we see the VIX closing right around 16, which is still completely normal volatility. Remember, we were seeing the VIX building up support right around 15, and we did expect to see a bounce to about 17, and we got very close to that level and closed lower for the day right around 16. So this is still just completely normal volatility, and you're always going to see a little bit of volatility in every single bull market. We have earnings, so we could still see more volatility, but as long as the VIX is staying below 18.2, it's just normal volatility and a normal pullback. If you see the VIX start spiking back out above 20, then we need to be more concerned about a deeper pullback that could possibly turn into a stock market correction. Otherwise, in the bull scenario, look for the VIX to stay below 18.2 and start trending down towards 14, and that should break us out to brand new all-time highs across the board in all of the indices. On Bitcoin, we're currently down about 1.75%, and we still see Bitcoin looking bullish, even though it is cooling down a little bit. We got rejected right at that price target at 67,000, and we're holding up above our support trend line and our 20 simple moving average of support, which is now right around 60,000. So as long as Bitcoin stays above 60,000, it's still incredibly bullish, and we could attempt to crack the previous all-time high and break out to our new price target at 75,000. If we break down below 60,000, you need to watch this support level that's right around 59,000, because below that, we're likely going all the way back down to the 50 EMA, which is going to be just below 54,000. Below the 50 EMA, we'll likely lose the bull trend, and we'll see Bitcoin likely go into a sideways market. So it's very critical for Bitcoin to stay above 60,000 and then attempt to break back out above 67,000 to form a brand new all-time high. So look for that bullish price action. Otherwise, we're likely to see more sideways consolidation in Bitcoin. On Amazon, we were up 1.68% today, and we do see Amazon closing back above all the moving averages, and we do see Amazon bouncing off of that strong support level at 33.11. However, we did see Amazon getting rejected at 3,400, so we could see more sideways consolidation in Amazon unless we can get a decisive break back above 34.52. Above 34.52, I think it's very likely we go straight up there to fill that gap at 35.80. And remember, we're looking for impulsive price action here, so we want to see Amazon trying to get there in a hurry. We don't want to see anything weak in any sideways movement because that's just going to be a bull trap as Amazon breaks back down and goes to another leg lower. So you want to see a very impulsive rally, and you can tell that earnings is right around the corner, and I don't suggest gambling through earnings by holding Amazon. If you're going to hold Amazon through earnings, make sure you're in it for the long haul, because if the earnings report is not good, we're very likely coming all the way back down to 31.85 or 31.36. At this point, you're running out of time for this trade unless you're going to hold it through earnings, so make sure you fully understand that that's the risk you're taking on, and there is very likely going to be a coin flip earnings with Amazon because I could really see it going either direction. We're holding above the critical support level, but we're also not breaking above the critical resistance level right around 3,400 and 3,452. So watch those critical levels because that'll tell you which direction Amazon is likely going in the future. On Tesla stock, we were down 0.63%, and at one point Tesla was trading right around $1,100. That's very close to that resistance level at 1080, and we did see a big selling above that level, and then we closed back down around 1018. So this is definitely looking more and more like that blow off top scenario, but that doesn't mean it's just going to be an easy short sell. There is a huge gap below at 911, and that top of that gap is right around 943. So that gap is going to tempt in a lot of short sellers, and that could be why Tesla actually doesn't go to close that gap. It could be one of those scenarios where it's just way too obvious and that gap's going to stay open as long as possible. However, in any blow off top scenario, there's always the possibility you go down just as fast as you went up. So we could see Tesla coming all the way back down to 845 and closing both of those gaps above. So watch these gaps below at 910 and right around 843. But if you see Tesla holding up above 960 or the top of this gap at 943, we could see a sort of sideways consolidation bull flag. And that would be a lot trickier because it would burn the premiums for both the bulls and the bears. And call option buyers and put option buyers would both be losing money as Tesla just burns through premiums as it goes sideways. So this sort of bull flag scenario is a possibility from this blow off top, and there's no guarantee we have to come all the way back down to our 20 simple moving average. The longer Tesla stock goes sideways, the more time for this 20 simple moving average to catch up to the price and then offer support. So don't get overly bearish on Tesla stock just because it's in a blow off top. I can't stress that enough because there's going to be a lot of people trying to short sell Tesla just because it's going too parabolic. And that doesn't always work because sometimes it can stay irrational much longer than you can stay solvent. So don't fall for that trap. Continue to watch resistance at 1050 and 1080. And if we see more blow off top to the upside, we do have that price target up there at 1218. Downside support will be 962, 910, 900, and the gap close at 843. On Apple stock, we were up 0.46% today, and we still see Apple stock struggling to break out above that resistance trend line right around 150. And each and every day that level does increase, so it's closer to about 150.7 now. We still see the price action above all the moving averages, and we are still developing bullish trending, so Apple stock does still look bullish at this time. Earnings is right around the corner, so obviously that's going to be a catalyst for the upside or the downside, but right now going into earnings, it looks like Apple is relatively neutral. We don't see new all-time highs, and we don't see Apple going into earnings all beat up, so it really is going to be a coin flip on whether Apple is going to break out or break down. So watch critical support at 145 and critical resistance right around 150.7. And a break above 150.7, we're very likely going to retest the previous all-time high at 157 in a hurry. On a breakdown below 145, we need to hold up above 142, 139, and the gap close at 137, or we could be going much lower. But I don't expect to see Apple breaking down below 145 unless we see a terrible earnings report. So at this point, you're much better off just being patient because nobody knows exactly how well or how bad the Apple earnings is going to go. If you want to take a little bit of risk, right now the price action and the trend is hinting more to the bullish side. So if you want to take on that risk, that's up to you. On the financial sector, we are flat on the day, but we still have very bullish price action with a very strong bull trend. The industrials were down 0.62% today, but we still see the price action above all the moving averages, and we're still developing a lot of bullish trending. The healthcare sector was up 0.49% today, and we still see bullish price action, and we're starting to see a lot more bullish momentum building up in the healthcare sector. The energy sector was up 0.58% today, and we still see very bullish price action and a very strong bull trend. So jumping back over the S&P 500, this is definitely still a very strong bull market, and we definitely still have a lot of very important earnings reports that we need to get through. A lot of eyes are going to be on Amazon and Apple earnings, which we don't get until the end of the day on Thursday, so I don't really expect to see this bull rally stalling out before we see earnings on Amazon and Apple. I still think the highest probability chance is that we go sideways from here and eventually get that pullback. So don't be surprised if we do see sell the news, even if we get great earnings. Eventually, all of the news will be priced in and we will see the stocks cooling down, and that will be our next buying opportunity. So I still don't think if you're not in this move that you should be chasing it at these levels. However, it's up to you how much risk you want to take on, knowing that we are likely going to get to SPY levels of 460 before we see any major pullback. Remember, any pullback in a bull market is a buying opportunity, so if you're just patient and you wait for one of these critical support levels, you will get an entry in this market. Nothing goes up forever, and nothing goes up in a straight line without any sort of pullback, so if you're getting that FOMO, it's completely normal, but just remind yourself we have plenty of gaps to fill, and we do know these gaps are going to get filled, so you're much better off just being patient and waiting for a better entry if you missed out on this rally. Also, don't forget that I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and I think now is the best time to be a BANC member. I'm currently running a 50% off promotion code for your first month, so now could be the best time to try out BANC Trade Alerts. You can find out all of the details and how to join by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.